everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you. We'll go over some ideas in that regard if we simulate a trade or two within the session, within the order window of our web trader and our app. There are some tools that make the risk management side of things quite a bit easier. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log in to the web trader platform. This allows you to trade on both MT4 and MT5 accounts from the same location, but with the advanced functionalities and tools that are offered within our web trader. And the same is true of our app. Now, when you log in the upper right corner, then you find yourself in our web trader platform. Now, our focus today is technical analysis, but it always makes sense to do kind of a fundamental news review of the main headlines to kind of get a feel for what the sentiment is and what could affect the technical movements, etc. Now, the biggest news really of the day today, barring any breaking headlines of anything unexpected, is NVIDIA reports its earnings, its financial numbers at the end of the trading today when the US market closes. So end of US market trading sometime in the minutes or short period after the US market closes this evening, we'll be seeing the numbers come in for NVIDIA, earnings per share and revenue. You know, the expectation has been built with NVIDIA that not only will they exceed the expected numbers, but they'll exceed it by somewhat of a large amount. If you take a look back at their prior statements over the past year or two, they've really set the tone with the tech sector specifically, and really drove the index like the NASDAQ 100, the US 100, up to record highs, you know, carrying a lot of other companies on their back, basically being the large draw on that NASDAQ 100. Now, they took a little hit with the whole DeepSeek revelation that you know, maybe there's a cheaper alternative for AI tools that won't require NVIDIA's high-end chips, and that revelation caused quite of a pullback. But it seems like that has since passed the fear of that, and the expectation is that there will still be great demand for NVIDIA's chips and technology. So what we're looking at then are these numbers coming in at market close, US market close. And so that's created quite a bit of volatility. There's been dropping from the start of this week to today. There's been a bounce back today. And the volatility certainly is still there on the charts with the major indices. And so understanding that storyline, we could bring up something like the US 500. Or the NASDAQ, and maybe the NASDAQ makes more sense. So if we bring up the US 100, and maybe I just type 100 here, that should bring it up. We've got it listed as the US Tech 100 because the NASDAQ or US 100 is tech heavy. So US Tech 100 makes sense. Now, we take a look here. Here's the dropping this week that I was talking about. You see this drop off Monday, Tuesday, and then we see the bounce back today, and now kind of the wait and see as to what will happen with those numbers later on this evening. And so as we look here, we see a bit of a support level in this area, which could act as resistance. And we see a little bit lower, some areas of resistance here. So right in this zone here is a resistance level, and we see that it's reached this area here already, and is pulling back a bit before the numbers come out. So if fear about these numbers, maybe not exceeding expectations as much as traders have gotten used to, and you know, but let's imagine if the numbers came in worse than expected rather than only exceeding the expectation by a little bit. If the numbers came in worse than the expectation, we certainly could see this pull right back down to these lows and even lower. So the potential is there for a strong pullback depending on the numbers, and I believe potentially a pullback leading up to the release of those numbers in like 4 hours time, 4 hours plus. Okay. So what we're looking at here is nice resistance here, which was old support. See support, support, support. When you break below that kind of support, then trying to get back above it creates resistance. And so here's the break below, and here's one try to break back above, and here's the second try today, still trying, I think, to try and break back above here. Now, you know, a couple things you can do here. Pending order above these two resistance levels, okay, up here, that if NVIDIA's numbers come in better than expectation and exceeding the amount of how far above expectation that many would like to see, if that comes in and surprises people on the positive side, then maybe the US Tech 100 breaks these resistance levels. And so a pending order up here could make sense, that you're waiting to see if it will confirm the uptrend with the big news, NVIDIA being the big news. And if indeed it breaks both resistance levels and hits a pending order here to buy, then it would make sense you have a stop loss back below and take profit up this way towards another resistance level on the Tech 100. Okay, so that's an option if you want to trade the index. Okay, we also could look directly at NVIDIA. Okay, so one option is pending order on the Tech 100 if you want to wait for a breakthrough. Okay, so if I'm looking at this and saying execute when price hits, or we should say if the price hits 21,005, let's say 540. Okay, if it hits up in this area, 21,540, then take profit at 21,803. And stop loss, if you're getting in here, would be back below these two support levels. So back down about where the price is now, 21,396 or so. Say 395. Okay, so then we're looking at not quite double potential profit to risk, but in that direction, almost 2 to 1. And waiting for confirmatory breakthrough with the big numbers that are coming out to get back above this broken support level here and this broken support level here. So if it goes back above this price and back above this support level, then it must have been good news for NVIDIA. Okay, and I know we're looking at the Tech 100, but NVIDIA moves the Tech 100 a lot. And so with their earnings coming out, after market close, this could really cause a move on NVIDIA or on the US Tech 100 because of NVIDIA. Now, why am I not looking at the NVIDIA stock directly? You understand that if after the market closes, then they report, you can't trade on the stock. It's a US stock, and you'd have to wait until the market opens. And when the market opens, it could open with that gap up and you already missed the movement, or down, depending how the numbers come in. So with the index, because it's traded on the futures, it runs basically 24/7 except for the reset of the server and the small downtime from the end of trading day to the start of the next trading day. So in effect, there's less time off with the index to allow as much gapping. Not that there can't be. There is gapping within indices, but less time means less opportunity for it anyways. So the numbers could be released, and this could break through, and you could trade for another hour before the index goes offline and then starts back up, early morning tomorrow. So you could already be in on the trade, whereas with the stock you won't be able to until the next trading day. Okay, you could get in on today's trading day with the index. You have a time period between when they report and when this index would close before it reopens tomorrow early morning. And again, it would reopen way before the US market opens because it's traded on the futures. Okay, so that's why I'm looking at the index instead of directly at NVIDIA. So we've got that set up. It looks like a 2-to-1 ratio. The technical analysis is determining our entry point above the two resistance levels. This is the entry price here. Exit price is determined by the technical analysis because after this breakthrough of a support level earlier in the week became resistance right here. So if it breaks above these resistance levels, that's the next spot where maybe it could find resistance. So maybe you take profit up near that level. Okay, and so now I just need to adjust my trade size to be the amount of risk that I'm comfortable with. So at 0.1, I'm risking 1,450. So I can lower my risk to a level that makes sense to me. I can increase. You can see how it's calculating your exposure. If I did 0.2, now I'm risking 2,900 to make over 5,000. So you pick the setup that makes sense for you with the trade size that makes sense. Okay, and I put 0.05. Now I'm getting closer to a number that might make sense for my balance, for my risk tolerance. So let's say I want to risk 1% per trade or 0.5% or 2% per trade. I can have that number in my mind already. So if I know I want to risk around 500 or 540 to be around 1% of my balance, so now I can just start to adjust my trade size until I get to the amount that makes sense for me. My technical setup already where I need it. So now with this trade size, I'm under 1% risk on my account, 435 to go after nearly 2%, 789. Okay, if that's what I'm looking for, then I can go ahead and set this up. I click buy, but you understand it didn't buy yet. It will only buy if the resistance levels are broken and the movement comes up here. Okay, so waiting for a technical breakthrough to confirm an uptrend. Why do I feel that might happen with the US Tech 100? Again, big numbers coming up for NVIDIA in a few hours' time. Okay, any questions, comments on what we just did? I'll pause for a moment. I do see some requests for me to speak in German. Apologies, Mirko, but this is the English-based webinar. We do have webinars in various languages, so just check on our website. There's a section for registering for all of our available webinars, and you should see different language options. I believe there should be a webinar or two in German. I know we have also Spanish and other languages there for different language speakers. Okay, if I spoke German, I would do it for you, but I can't. Okay, I don't see any other questions or comments coming up, so let's go ahead and maybe look at another instrument. Now, what's interesting, we could take a look at the US Tech 100 and see if there's a signal, and there is. So, we just set up a pending order to buy maybe if it breaks through the resistance levels just before some major news coming in. The signal says also to buy. It shows resistance levels here, and in actuality, this signal is already almost to the first resistance level for the take profit. That's the resistance level we drew, right? So it's a little late to get in on this signal. If you saw the signal earlier today, you'd already almost be to your take profit. You could even close it now and have a nice return on it. The support level was down here which is these levels back this way. Okay, the support levels were what it bounced off of. Support. The signal said buy and it went up. And so we're almost to the take profit, which is the resistance level. So the next move would be our pending order is above these two resistance levels. And if it breaks through those levels, we've got a pending order then to buy again. But the first signal acting on it to buy right now is a little late for this signal maybe because it already reached nearly the take profit zone here. Doesn't mean you can't buy. If you think it'll keep climbing, certainly you can buy. But as I read the purpose of this short-term signal, it's already almost reached the profit zone there. Looks like it's trying to push into it right now. I anticipate the potential that as we get closer to NVIDIA's numbers coming out, you might see the market pull back a bit. It's been rising through the day today, up. But as it gets closer to those numbers coming out, you might see some volatility where it starts spiking up and down. That's typical before big numbers are released. Okay, so we've got a pending order on this ready to go if we get a breakthrough of those resistance levels. The signal, it's nice to verify that was a great signal. Had you followed it earlier today, it would have been a profitable one. Let's go to something different. Gold. Okay, gold is interesting. It had quite a pullback. It also had quite a rise. Not that long ago, from earlier today, it was down here and spiked up here. Here's the pullback and the gap down. And so what's interesting is if there are fears of inflation, then gold is a safe haven. If there's fears of a crash of the market, gold is a safe haven. So there's more than one reason you could think of why gold might want to go up. I can tell you the housing data out of the US today, if you look at the economic calendar, was bad. Okay, it was a 10% decline in new housing starts, and it was expected to increase, not decrease. So month over month and year over year, the housing data showed a huge slowdown in the US for new homes. So that's a bit of bad news. But at the same time, maybe that increases the likelihood that the US will lower interest rates a little sooner rather than later. Because that's what Jerome Powell and the FOMC committee kind of keep alluding to. It's data dependent whether they'll lower interest rates any further. And the idea is if the economy slows down enough, then they'll say, okay, maybe we need to lower interest rates. What they're afraid of is inflation coming back. And if the data is too strong, then they're apprehensive to lower interest rates any further. Whereas if the data is like the housing data was today, that increases maybe the likelihood that they may decide to lower interest rates a bit sooner in the US rather than later. So with that idea in mind, you could start to say, okay, if there's a little more likelihood of interest rates maybe being lowered sooner than some had thought because of that weak housing data, well, lower interest rates tends to cause inflation, a weakening of the currency and a raising of prices. And so maybe that gives gold a reason to go back up. Okay, bad housing data can create fear and people don't want to run to a safe haven, and also fear of interest rates being lowered, which could cause inflation to go back up, also could be a driver to go back into gold. So you can play the fundamental news game in your head that way, and if it convinces you that more likely than not you think gold has a fundamental reason to go up rather than down, then now you can start looking at the technical analysis. Okay, as we look at the technicals, and let's go first to 1 day candles. Okay, we see for 2 days gold has dropped. Okay, red candle, and we see a double bottom here where the red candle hit and bounced. That was yesterday. Hit again, bounced again today. So 2 days in a row, bouncing off this price level down here, just below 2,900. Okay, we've already tested. Let me get rid of some of these lines. We've already tested some higher levels. Okay, and the resistance now is up here. The all-time high, 2950 plus, 2954, 2955. we find resistance 1, 2, 3, 4 times, didn't break it, and down we went. Okay, nothing's really changed in terms of reasons why people might buy gold. There's still fear of inflation. There's still fear that the US market is weakening, maybe faster than some think, especially in the housing sector. There's still fears of tariffs coming from the US on various countries, and then maybe a tit-for-tat war back and forth in that regard between other countries in the US. So all of that's still there. And if that's the reason why you think gold went to all-time highs, then maybe this is an opportunistic spot to buy. From a technical perspective, it looks like a nice entry if you think the fundamentals are on your side for this to go up. Why do I say that? One-day candles, resistance right here. And we follow that over here, and that's exactly where it found support and support. So something would have to change fundamentally for this support level to be broken, which was old resistance. Okay, so it's not a coincidence on the charts. When you do your technical analysis, you say, why did this bounce from that exact price twice? And you look over and you say, wow, that's the exact spot where there was resistance. And once it came above there, now it acts as support at that level, at least maybe temporarily. Okay, so if we're looking here and you think gold has reason to go up, you could do a market buy. If you think with the NVIDIA results, it could cause a lot of volatility and it could pull down before it goes up, you could put AvaProtect on it so that you can be more patient. I could put 1 or 2 days protection on this trade, and you could do both. You could do one without AvaProtect, one with. Okay, if let's say I want to buy and I'm going to go even, I'm going to say, here's my take profit before the resistance level. Here's my stop loss just below the support level, almost an equal distance to take profit and stop loss. Okay, so take profit up around 29.50. The high was 29.54. So 29.50 for take profit. Okay, stop loss 28.88 or 28.87 gets below today's low, below that support level by a little bit. 28.87. Okay, so little better potential profit than risk. Okay, so I could even cheat this down 28.85 to make sure I'm below these 2 wicks over here by a few dollars. Okay, still better potential profit than risk. Now I just need to change my trade size. So if I go half a lot, I'm risking 1,400, 0.2. I'm risking about 1% of my balance. Okay, just a hair over 1%, and potential profit better than 1%. Risking 560 or so to make over 700, 728. It's moving because the price is moving. So the potential profit and risk is changing by the second. Okay, so that's one option. I make a move with a stop loss. Okay, we can take a look at that open trade on the live chart and take a look, where does our stop loss show? Make sure we're below the support level. Okay, so let me just change to 4-hour candles. Okay, and indeed I can verify. Here's the wick on the 1-day candle. This is a 4-hour candle, but there's that support level. Here was the other support level here. Okay, and here's the stop loss. Okay, stop loss is just below those wicks. All right, so if I go to 1-day candles, we can see it. Be harder to see because it's 1-day candles. This little price action is in the way to see the wicks, but we're just below the 1-day candle wicks with our stop loss. And we actually had a better view than on the 4-hour candles. And we can see stop loss just below today's low and below the low of this day over here. Okay, and we can cheat that down from this location. I can move my stop loss like this, and the stop loss is the yellowish light orange colored line. So you see the purple line is the one we drew, okay? The purple line is not labeled stop loss, it's the yellow orange one. And so we're below that support level here, okay? Just above 28.85 now. So I just lowered the amount I'm risking because I was at 28.85 even, now I'm at 28.85.26. And I'm still below that support level by $2-3, okay? All right, so and we can see the take profit up here. Right here before the resistance. This was the resistance level I drew, the top line, and this line here is the take profit, okay, 29.50. So the technicals all line up. Here's our US Tech 100 waiting for a potential breakthrough of the resistance levels to enter on a buy. And then maybe we take a look at a currency pairing or two. Euro USD would make sense. Why? Because we've got a major announcement that is affecting US indices the strongest with NVIDIA reporting. And so a USD pairing might make sense. We've had some weak data out of the US today, so that tends to favor the euro. And we'll see how NVIDIA does, but we might see some momentum if fear starts to leave the market with the euro potentially climbing here. Now, let's see what the signal is on Euro USD. It's a sell, but you see it's not moving in the proper direction right now. We've got resistance here. This is actually a nice entry for the sell if you feel it's going to reverse, but you see it's been climbing, and just now it looks like a red candle is forming, like it might try to drop. But what I see here, when I look with my own eyes on the larger chart, I see an uptrend, okay, that looks like it might want to try and break this resistance level. Okay, so this signal it's not confirming to me on the larger chart that it wants to downtrend on the one-day candles. It looks like it wants to break through. Now, if we go to smaller candles, 15-minute, okay, technically speaking, it's an opportunistic spot. Here's the resistance level on the one-day candles. It's an opportunistic spot to short this. Perhaps the USD strengthens, a little fear hits before NVIDIA reports. So in the short term, I could understand this entry point as a sell. In the bigger picture, I feel like today's data out of the US, that housing data was really bad. It works against this trade. So sometimes, even if the technical entry point looks opportunistic, you look at a technical signal and you say, wow, the fundamental news just doesn't seem to fit. The markets have been rising today with the US dollar weakening. There was bad data out of the US, which works towards potentially weakening the USD further. There's greater expectation maybe now that the US might be able to lower interest rates sooner, which works against the USD strengthening. So all the fundamentals are working against this signal right now. So no wonder it looks like it's trying to fail, right? So that's the difference between the gold signal that went the right way. The fundamentals were in line with gold rising with a weakening USD, with the bad housing data today out of the US. And the fundamentals are not in line with this signal. So when you look at technical signals, this is a good example of how to avoid one that's likely going to fail here. It's about to break through the pivot line, which means your stop loss might be hit if you had your stop loss on the other side of the pivot, and how to get in on the signal that is successful, the gold signal from earlier. So I advise that you combine your understanding of the current fundamental news with the signals that are provided in our platform and app. And only if you think the fundamental news fits the technical signal, putting the wind at your back, so to speak, with the technical signal, then you might go ahead and follow the signal, okay? In this case, had I sold when I saw that little red candle forming, we'd have already lost potentially here, because now it just said the market has reached a key level. The key level it reached is the pivot line. As soon as it breaks past the pivot, now it's a buy signal. So this this looks no good. And so it's nice that we reviewed the fundamentals and decided that, hey, maybe this signal's not the greatest. Now, once it broke through, we see it pulling back, but that doesn't lead confidence in a sell signal, and it just broke above the resistance just a minute ago. Maybe it pulls back now. It could. I'm not saying it won't, but the fundamentals aren't necessarily on your side there. Likely we'll have some reversals. Could be on this as well. Could pull down. The US Tech 100 could pull down as it gets closer to the NVIDIA numbers coming in. It wouldn't surprise me to see some reversals, but currently the fundamental news on this is not on the side of Euro USD necessarily selling here. And we see that was a failed signal just as we watched it. Okay, but if we bring gold back up and take a look at that potential signal, okay, we see not breaking through, but it could. Gold already climbed up this direction, and now we have a sell signal on gold. Okay, we see there was the buy signal from earlier today already went up and pretty much hit the key level. Now the opposite signal came in to sell. So it's interesting. We have some new signals coming in, potentially in opposite directions, which is kind of what I alluded to. We could see some reversals on some things. One last instrument that we could look at, crude oil. Crude oil had inventories today. The crude oil inventories, they come out every so often, and it showed a larger decrease in inventories than expected, which means that maybe there was larger demand than expected, which usually if the inventories went down because of larger demand, you would expect the crude oil price to jump up. Well, the opposite happened, right? So maybe this is a temporary drop because the fundamental news kind of supports that maybe if crude oil inventories drop, that maybe crude oil could go up. The other side of that coin is a slowdown in the US economy, largely shown in the housing sector today. That would be bearish for crude oil. So we've got two different fundamental news points working in opposite directions maybe. Crude oil inventory showing lower than expected supply, which typically would cause crude oil maybe to want to spike up, but a greater slowdown in the housing market in the US maybe showing that there could be less demand for energy if there's such a slowdown in the US economy. So what we see here is the bears are winning out over the bulls right now, but you might pick your spot if you think this is a temporary sell-off. So better than expected numbers from NVIDIA, for example, could reverse this fall. Okay, showing strength in the US economy with better than expected results from NVIDIA could reverse the fall potentially of crude oil from a fundamental standpoint. Right now, this is a solid downtrend though on crude oil. And it'd be interesting to see what was the signal today on crude oil. It's a sell. So the signal was dead on. We already hit the take profit on the technical signals. So when that housing data came in worse than expected, down went crude oil. And so maybe that was enough, even with the data being 50-50, with two different announcements working in opposite directions, at least that evened things out. That might have been enough for you to follow this sell signal, and you see the resistance held and down went crude oil, right to the take profit zone, reaching it not that long ago. So this signal believes there's support here. That's why it recommends taking profit in this area above 68 is because there's support there on the chart. So we can take a look over here and see why the signal recommended taking profit here. Here's 68, and that's basically the bottom of the take profit zone. And you see that there's support right here on the one-day candles. It hit and went up, hit and went up. And so you've got support here and a little more support down lower according to the signal. But here's your first support right here on the one-day candles. Here, here, and then up it went. And so we're right on top of that support level. And it looks like it's got enough momentum that it might try to drop to the next price level down in this take profit zone. So if I was buying on this to try and catch a low point, I would probably put my stop loss below 68. Why? Because that's the bottom of the take profit zone in the signal. That's well below this support level, where we see on the one-day candles it bounced once and twice before going up further. And this price down here gives you some distance below this first support to get your stop loss somewhere down here. Okay, you know, 50 cents will get you below both of these levels. If you think as the NVIDIA results come in, you might have some optimism and that crude oil could go back up. Okay, I hate to buy in a strong downtrend. When I'm looking at the technicals, I would like to see a reversal first before I decide that I would want to go, in this case, in a buy direction, because I want to see an uptrend, confirmatory uptrend from a technical standpoint. And right now, if we go to like 30-minute candles, we don't see an uptrend, we see a strong downtrend. Just broke below this support level here on the 30-minute candles. And so what I might do if I wanted to buy on this, with the crude oil inventories being the driver fundamentally as well, being lower than expected, which is typically a bullish event, I might do a pending order then. If it breaks back above this support level here in the 30-minute candles, then I might look to buy. And so pending order at 68, maybe 75. Okay, if it hits 68.75, then it's broken back above this broken support on the 30-minute candles. Okay, so if I'm then buying, stop loss then is going to be, and I'm going to execute when price hits, so it's a pending order, 68.75 or something above that. Okay, 68.75. It's not that far up, but it would require an uptrend to start. Okay, I'm only giving up about 30 cents or so, and it would establish an uptrend above this broken support on the 30-minute candles. That way, if it keeps plunging, you're not in, you're not losing, and you're only getting in if it establishes upward momentum and an uptrend back above this broken support. Take profit, then from 68.75 entry could be right back up here where it plunged from. A lot of times when there's a rapid drop, you can get a rapid rebound. And so 70 even would be just before this resistance level. This was the broken support. So if it comes back up, it might have trouble getting back above there. So right at 70 could be a take profit. Okay, so entry on a buy, 68.75, take profit 70. Stop loss, 68.63. My potential profit is 10 times my risk. Okay, risking 840 to make 8,750. Now I can adjust my trade size. If I do one lot, I'm risking only 120 to make 1250. Can do 4 lots. I'm risking less than 1% to make 5,000. 4.5 lots, risking about 1% on the trade to try and make much more. Okay, times 10. Let's just double check our numbers. 68.70, stop loss 68.63. No. This is why you always double check. Our stop loss needed to be, oh yeah, that's right, my bad. Because we're waiting for the pending order to break through, then our stop loss is back down here. So 68.63 is the stop loss, which is right about there. I'm going to go lower. I'm going to bring the stop loss down below this wick. So 68, that's a close stop loss. So 68.40, or 35. Puts us down in a better spot. 68.45 gets us almost below the wick. Let's actually go 68.30. It defaulted me a stop loss and I didn't adjust it. So you always double check your stop losses. So 68.30 is here, below this low point, okay? We will only enter if it goes and establishes an uptrend up to here to 68.75, okay? And take profit at 70. So now that makes more sense now. So now we're looking at 10 to 1 ratio is great, but that stop loss was awfully close. So now we're below the support level by a better bit. Doesn't matter if it comes down now, we didn't enter. But if it goes back above this price level, then it's less likely to come down and hit here before it goes up here compared to where it is now. So a market move now with your stop loss here, very easy to hit the stop loss. Pending order, if it breaks back above, it's got momentum, less likely then to come down and hit. So we're looking at trade size then, needs adjusted, 1 lot, risking about 1% would be maybe 1.2 lots, and there I go. 541 is 1%, I'm at 540. So looking to make 1,500, more than or approximately 3 times the risk, little less than 3 times the risk, 3 to 1 ratio. And that one's in motion. So you can see how easy it is to even catch your own mistakes. I thought it was 10 to 1 ratio. I double checked my stop loss, reset it in the order window, 3 to 1 ratio. And that it made more sense anyways, looking at the chart. So some examples of how our order window can help you with your risk management, can even catch lazy mistakes and correct things before you ever place your trade in motion, to make sure you're seeing exactly your risk and your potential profit. Now, if this does establish momentum and break back above here, we're in on our trade with our stop loss then down here. Potential profit, 3 times approximately the risk up to here. All right, everybody, I think this is a good place to stop. We've got a few trades we went over, a couple that are already running, or one that's already running and a couple that are pending. Here are the pending orders with the strike prices, the trigger prices, and here's the one that we got started almost at even, barely moving so far. Okay. All right, everybody, thank you for joining. Good luck with your trading. If you try to take advantage of today's volatility with the NVIDIA results coming pretty soon, and good luck the rest of the trading week as well. Bye for now.